Good morning. This recording is based on USC's global compensation for international expatriates, and it's presented by Michelle Ward. Multinational firms and their compensation policies. What are the objectives for the employer? That there be consistency with several strategies, structures, and business needs to attract and retain staff in greatest needs and opportunities. The cost-effective transfer of international employees, and a consideration of equity and ease of administration. What would be the multinational firm's compensation policy objectives for the employees? Employees would expect that their corporations would provide for them housing, education, and recreation, especially for the employee or the spouse and the children. They would expect financial advancement, savings, and income. They would expect offerings of financial protection, including benefits and social security and living cost. Let's look at calculating the international compensation for these workers. There are two basic approaches used to determine international compensation packages, which are the going rate approach or the balance sheet approach. The going rate international compensation policy. Let's look at this first. It includes the salary structure, which is based on the local market. It also includes a local compensation surveys, which are done to select the specific compensation package that will be required for the specific task. Then there should be benchmarking, and that is the base pay and benefits may be supplemented by additional payments for low pay countries. And as well, there is a potential risk for re-entry problems when the employee is repatriated. But we'll look at this a little further in the presentation. What is the logic of the going rate approach? This approach is very effective in attracting PNC and TNCs to locations that have a higher salary scale than the home country. There is equality with local nationals. It is easy and simple to understand. The expatriate can identify with the host country, and there is equity between other expatriates and other countries. There are some disadvantages, however, to the going rate approach, which we can look at now. There is variations between assignments. There's also the differences in managerial salaries, and the effects of taxation influences the compensation packages. There's rivalry for the assignments to the locations that are lucrative in pay. And on being repatriated, the problem of the home country salary. The levels are oftentimes below the host country salary. And so it poses a difficulty for persons returning home to their home country. Let's look at the going approach at work. In a survey by Towers Perrin, according to Dowling, Feston, and Engel, it shows a total compensation for the citizens of the following two countries. In the US, an expatriate can make up to $2 million per annum, whilst an expatriate coming from Belgium makes up to $987,000. So in our example as seen below, a manager moving from Belgium to the US will definitely accept a package for expatriation, whilst a Belgian manager moving back home would be at a disadvantage because their salary will definitely decrease because of the amount of the home pay. Let's look at the other approach, the balance sheet international compensation policy. These are some of the items that are included in this policy. It maintains a home country living standard and financial inducements. the home country pay and benefits remain equal. The adjustments to home packages for additional expenses in the home country are given, and there are financial incentives like a hardship premium to make the package more attractive for persons to actually go on the assignment. The logic of the balance sheet approach then is that this approach to international compensation is a system designed to equalize purchasing power of the employee at comparable position levels when they are living abroad and in the home country, as equal to the home country, that is, to provide incentives to offset qualitative differences between assignments and locations. So they want to give them value, worth, are equal to what they're getting when they are at home. What are some of the disadvantages of the balance sheet approach then? It is difficult in attracting human capital or human resources or people to leave their home country to go overseas to the host countries. It is very complex to administer, but it remains the most widely used compensation package by multinational corporations. It can also result in disparities between the expat and local nationals because of the rate of pay. It could also result in disparities between expats and other expats from other countries as well. Let's look at the balance sheet approach at work. For example, a Chinese manager with 15 years experience costs less than US $70,000 per annum, whilst a US citizen expatriate manager with corresponding expertise would cost his or her organization well up to $300,000 per annum, which is a very big disparity in the amount of money paid out per year for management. So then the differences in salary compensation for parent country nationals and third country nationals are as follows. For parent country nationals, they need to be compensated for the cost of their international service, which can be based on tax consequences and the length of stay. It is also based on the premium inducement for hardship caused by the move, and there's also a consideration for the pay and compensation, which is dependent on the distance between the home and the host country. Now, for the third country nationals, the pay is based on the home country base salary, which is less expensive for the corporation itself. There will be a reduction in the expenses for this type of worker, mainly because this type of worker is well experienced in this field and they're informed, so they're accustomed to moving around, and so there's a less expense in having to maintain this type of national. So the pay system then is more flexible in response to the demand for the global dynamics of this type of worker, the third country national worker. So do these differences make a difference? Yes, they do. The third country national are important to the multinational corporations. So they may need to retain the way that they compensate the TNCs for their value. They have more experience and would benefit the organization more in that they will save them a lot more money. Whilst on the other hand, the PNCs in top management are compensated at a good rate. Therefore, the multinational corporations need to consider the displacement of the individual and compensate them accordingly, which costs the company more money. Let's look at multinational corporations and the benefits that they have to provide for workers like these. These are some of the required benefits in most areas that you will find. You will find that they require old age and invalidity and survivors benefits, or sickness and maternity leave benefits, work injury benefits, unemployment benefits, or even family allowances such as education for the children or the spouse. And this includes also things like housing and job security for the spouse of the expat. Then multinational corporations also have to have some discretionary benefits such as transportation, and then they have to look at meals, And if they're going to include meals, or if they're not going to include meals, then they look at things like loans for the expat. How feasible is it for them to get these things? And then the executive prerequisites, things like the company vehicle, which sometimes is included according to the country, or a cellular phone, a company phone, which is used for virtual assignments and so on. And then you have a company office where they're located, and they have to be comfortable, and where they work, the place they work from, and that they're able to do the work effectively. Then there's medical benefits, and this might include full medical or vision or dental according to where the um, expat is relocated to. Understanding then the compensation policies of other countries, I would say that mandated increases in salary, additional house holiday bonuses, allowances for meals, transportation, profit sharing are some of the varying schemes corporations grapple with from country to country. So their approach should be then to understand and develop a global perspective, to interpret according to pay practices and requirements of the country, to ensure that global rewards are relevant and workable to the local markets of the operation, to understand the collective bargaining arrangements that govern salaries for unionized workforces, to make sure that the salary increases, compensation policies for allowances are considered according to the country's practice, and then to make consideration for the various laws in the Civil Rights Act for fair labor standards according to the specific region. I want to thank you for listening. I hope that you would have learned something from this short discourse, and I want to wish you all a good day. Thank you.